Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is December 2nd, 2024. Now, the last that I spoke to everyone, we were talking about the monthly close incoming for Bitcoin that was going to happen on Saturday. Well, we have now seen that occur. Bitcoin did meet the criteria of closing above the upper second standard deviation here on the monthly time frame, and it kicked off more aggressive expansion to the upside in terms of the Bollinger Band. So we do see that we've gotten a little bit of expansion after closing above the upper first into the upper second here now. But Bitcoin still has some work to do to actually get its more aggressive expansive posture, as noted by the BBWP volatility metric down here. This is measuring price volatility away from the basis band, both inside the bands and outside of the bands, depending on how expanded they are. Right now, we are coming off of this compression back here off of the higher low structure once Bitcoin broke out of its lower high here at 31.8, which remember was the close open that we were looking for back here from June of 2022. And we did see this break back in October moving into November of 2023. Well, we were looking for expansion above the upper second standard deviation. We did get that in December of 2023 moving into January. Of course, we had the ETF launches coming in here. We had the spike high to the upper third, and then Bitcoin has been went sideways, I should say, above the upper second, and then came sideways and down in a mean reversion fashion towards the basis, kind of throwing a wick down towards the basis band there. You have to forgive me. I think I'm getting a cold. But now, of course, we have higher low, higher high structure here, another higher low, and only from here can we get another higher high. So we have full trend to the upside here. What we're looking for next is a closure outside of the upper third standard deviation. That is now coming in at $117,000. So although Bitcoin is in blue skies and it is running, to get true expansive posture fully confirmed to the upside here, we need to see closes back above the upper second and upper third. Otherwise, the upper third will likely act as a cap on price in the near term. If we start to see monthly closes above there, though, we're going to see significantly deeper price targets. So I would expect that if Bitcoin does push towards that upper third standard deviation, let's say in the month of December, that is likely going to land somewhere around where it currently is, between 117 and about $120,000. Now, what I need to see by the end of December, end of the year here, to close out this monthly and, of course, the quarterly, which we will start talking about around middle of the month here. But in this case, I need to see closes coming in above the upper second standard deviation by the end of the month. Otherwise, we're going to get Bollinger Bands expanding past price, and we'll see that these areas are very highly likely to act as overhead resistance in the minimum short-term time frames. Right now, that's at $95,900, almost $96,000. If we do see closures by the end of the month above there, I'd be looking for expansion again to continue to the upside and for us to get a nice update of those bands in a more aggressive posture to the upside. Likely, the upper third somewhere around $123,000, $125,000 or more. And for some context, we do have an important fib level. If it gets more aggressive expansion, for instance, if Bitcoin does start to really push up against it, and it starts, before the close of the month, starts to push up to $120,000 or higher on the next closure coming into January, rather, I'd be looking for the 1414 at about $128,000 to $130,000. Now, I do need to note that this needs to confirm that expansion. Can it walk the bands up? Yes. And then we just keep raising the ceiling at the upper bands as the potential overhead resistances, especially where they have confluence of Fibonacci levels and any lower term time frame support and resistance levels that form from there. And, this is a very good setup. I will say that this would be a first for Bitcoin, but we've seen a lot of firsts. We saw a double top back here. That was a first for Bitcoin. Yes, this time it was different. And this time it is different, so to speak. We had the first double top in Bitcoin's history, significantly higher low here that got dropped. Bear market ensued after the lower high at 48,240. We got our first ever expansion to the downside and reclaim of a prior cycle all-time high. That was a first. We saw then the nice compression here, the run back to the new all-time high with expansion, not really aggressive expansion, but slightly new higher all-time high here at 73,835 prior to the halving. We had never previously seen Bitcoin have put in a new all-time high prior to the halving. Then we had our 6 months of sideways and down, and now we're getting that nice higher low structure. This needs to be said. This is not my my initial take on what's happening, but we need to see, of course, this last higher low in the monthly hold. Let me go ahead and just put a red line there, actually. If this last higher low were dropped at any point, we would have an uptrend break. And as it stands right now, wherever this puts in a high in the monthly, this is going to be the criteria for essentially starting to look for a structure change on the monthly and possible bear market to ensue. That is, unless we see another higher low that comes in significantly higher. So, for instance, if Bitcoin were to put in a high, let's say a shallow high on the monthly, this is just for just as an example. Let's say it pushes the upper third, pushes into 120, maybe even spikes up above it, but doesn't close above it. Hitting the 125, 128, maybe get a big old sell off or something, and it closes back below, and then it closes below, let's say wherever the next candle is, maybe it's this candle or the next one, and puts in a high. Well, to break structure, we would need to see a breakdown on a close below $49,000. Then we look for either, a deviation of high that fails to close above this most recent higher high, wherever that is, or we look for a lower high and then lower low structure to ensue. That is not what I'm looking for right now, but it is something that we have to mark on the charts here and something to just be aware of contextually where structure is right at this very moment. I do think that Bitcoin, once breaking above $100,000, is going to have a nice leg up. We might even see the famous teleportation that Bitcoin likes to do when it breaks big areas of selling pressure. So that is my take on the monthly as it stands right now. The other thing to be aware of, we don't want to see in-trend bearish divergence because we have a complete trend now. We do want to see Bitcoin closing above this last high here. Of course, this is the 73,835. That's not what I wanted. I just wanted to get the measurement here. 77 is where we need to see a close above before putting in a high. It can close below it as long as it's not putting in a high. Then it's fine. We need to see it closing above there and putting in a high somewhere above that 77 read. So it's a 76.79. So we need to see a 77 read. Let's go ahead and look at what price would be at around a 77 read. So where would price need to close to avoid an in-trend bearish divergence? Because that's going to be something that we do want to keep track of. We'll go ahead and take the critical zone down to that 77 read just to see what that number would be. All right, so we've got the bull critical zone. So basically any closes back above the most recent high, which, I'm pretty confident we're going to see closes back above $98,000 here. So that would be the critical zone. On any closes back above $98,000 that put in a high, it would avoid in-trend bearish divergence. Of course, there is still a very high possibility of longer-term bearish divergence of the hidden kind. Maybe it throws a bearish divergence. I mean, because technically, if you were to look back here, these bear divs from the early history in Bitcoin, these aren't, we got an in-trend bearish divergence between the last cycle highs. I would not be looking for that to continue because we did not, I mean, technically we got an in-trend bearish divergence, but this was a downtrend shifted to an uptrend. So we need to see in-trend. So this was actually between these two RSI levels here, the most recent high at 73,835, that was a hidden bearish divergence and led to a correction. So what we have to be aware of from here on out, while this is running, is wherever the next high is put in, we're looking to see if it either gets bearish divergence, regular bearish divergence in trend, or if it avoids it. So above that 77 read, it would avoid it. And having closes come in above the upper second, I'm looking for this to get continuation as long as Bitcoin is trading above that upper second by the end of the month. So looking pretty good. Let's look at stochastic momentum, and that is going to be this guy here. It has turned back up, got that nice bullish reset. We've talked about that. $87,000 is the pivot to close above by the end of the month. And again, there's two criteria that I want to see by the end of the month: close above the pivot, close above the upper second to continue that more aggressive expansion. Now, can it come down intra-month and even tag the upper first? Absolutely. That's now at almost $75,000 at 74,700 or so. Could it retest? Sure. I don't want to see it closing below that upper second. That would be a danger signal, although not lights out. That doesn't mean that we, pack it up and bull market's over, bull runs over, all that kind of stuff. Even if it did close back down somewhere around that upper first. I'm not telling you to be scared of something like that, but what I would prefer to see to get this thing just going is closes above that upper second. We would evaluate, though. We would have some things to talk about if it did close below the upper second and anywhere towards that upper first. And as long as it's closing above the 73,835 to that $75,000, it's still going to get expansion to the upside and still look really, really good. But we want to see this. We want to see this continue with its actual expansive posture and kind of come back to it later. Now, of course, we had the weekly close with our monthly shortly after the monthly, one day after, in fact. And in this case, weekly still looks good. Closed slightly above that upper third standard deviation. This is full on expansion to the upside. But what we are seeing is the close open here, the bands passing and the upper second acting as initial resistance in the lower term timeframes at 97,700 to 800. Back above there, I would be entertaining, a trip back to $100,000 and possibly even a move up to start testing that upper third standard deviation. I would still take it, 103 to 105, maybe even 106, and then start working its way up to 110 to 112, where we have this upper third. If we were to see Bitcoin trading back above the upper second, I would look for that upper third to move up a little bit towards $112,000. That just so happens to be a local fib pull on the weekly here. And, that's right around that two spot extension up there. But I still would be looking, there's some overhead resistance here at 101,800 and then the 106. I would still take the more macro 103 from the bear market pull. So somewhere above $100,000, I'd be looking 103 to 105 as the primary resistance before heading up to possibly test that 106 and then I'd start taking about $2,000 at a time. 106 to 108, 108 to 110, 110 to 112 by that upper third here on the weekly, not upper second. Upper second is what Bitcoin is rejecting in the early goings of the month here and this weekly. So not too much crazy going on here. What I do like is where the upper first is, and that is at 83,800. And this is something of interest here. If Bitcoin were to drop any of its local structure here, note that we have the upper first now above the 1272 extension from this consolidation here, and in between the 1414 at 87.5 to this 82.5. So this would be a zone of interest. If we did see this area dropped, then we look down to around $80,000. Anywhere below there, fair game, 75 to 73 down here by the actual 100% fib, which is the original range that we have seen Bitcoin breaking out of. And to be quite honest, that I wouldn't want to see Bitcoin losing this upper first when it's in the midst of full-on expansion like this. 80 over 68, could it get away with it? Yeah, but that would put the kibosh on more aggressive expansion to the upside for the weekly for a while. If we saw spikes down below, that's fine. No big deal. Let's go ahead and look at the weekly RSI. There is the potential for regular bearish divergence, likely wherever this puts in a high. How would this put in a high? Right now, it would be any closes. We'll see a technical high and any closes back below 90,682. Beware. That would confirm the swing high up here at 99,860, but realistically closes back below 89,800 or right around $90,000 would paint this as a 3-candle high structure. And we're looking for pullbacks to the 87.5 and possibly down to 82.5, maybe even 80K, thus blunting the more aggressive expansion to the upside. But this is still in a really good posture. What I would like to see is if it is going to put in a high and pull back, we want to see closes remain above that upper first, get a nice bounce, take out the highs and move on to some of those deeper targets. Could it just go sideways and move on? Absolutely, as long as it's remaining above last week's low at 90,682. It's almost 90,700. Then it's looking fine. Can track sideways, possibly regain that upper second and start getting a pop up. That would look really good for the bulls, actually. Let's go ahead and go to that daily. Here's something to be aware of on the daily. We have bearish divergence from this high to this high that was put in, got a little correction. That was regular bearish divergence. It did not populate here because it didn't really paint anything more than a swing high, but there is valid bearish divergence there in my book between these 2 points. And we saw that correction already, or mean reversion already back to the 20 simple, even tapping on it in Monday's candle here. Of course, it's still Monday for me, but the Tuesday candle for Bitcoin is open. We did just get a second drive of bearish divergence between this high and this high that is now painted. And that was confirmed as of Monday's closure below the green candle open here. And, well, it was actually below this green candle here. Did it close below the open here? What was the open? 95,665. 95.8. Okay, so it was this structure here and closing below the bear low and the bull low and open and close there. So, or close open there. So painted the high, back to the basis, being above it, bullish, getting below it. We're looking for it to run this low here. And that's where we have to be aware of around 92,000 to that 90,682. If that's dropped, locally, we're looking to this structure over here, somewhere around 87.5. Again, that was a fib level as well. And that $85,000 is kind of a checkpoint. So if we were to pull that fib again, just to reference this more local fib pull for extensions, and we can kind of get our areas of confluence here. I know I keep deleting it, bringing it back, but that's just so that it's a little bit easier on your eyes. When looking locally here, lose the basis, get down towards that lower first. It can save itself there and possibly just try to swing this low at 90,000 and 90,680. If it starts to close below, though, we're looking down to the lower second, whereas that right around the 1414 at 87.5. That's right where we see the close open here. And you could call this like an order block candle, got kind of 2 order block candles in there. And then down below there, yes, I don't do order blocks like everybody else I know. Lower third is right around that $85,000. It's at 84,600. If that area is dropped and we don't see a pivot there, then we're looking to that 1272 at 82.5, possibly down to $80,000. Again, I don't want to see that on any closes during the weekly, or else it's going to blunt that aggressive expansion. So I'd prefer to see Bitcoin now take out the top side of this at 98,750 and go test the highs and start hitting that $100,000 and above towards that upper second standard deviation at 101, possibly to that 1786 above it if we start to see initial spikes back up. We would see etchings of this on closes above the upper first, but we still need to see the criteria met of closing above that 98,750, taking out that bear wick high here, where the close open all-time high is now at around $99,000. Any trading above there, even in lower term timeframes, I'm looking for the high to $100,000 getting hit, possibly even as spot price. You're going to see probably a lot of take profit orders there in that zone. Above there, then we can start looking to, I would still say 100 to 103 is kind of a zone. 103 to 105, you might want to take 106, but we would have to see closures above that 101. I would say even above 102 to start really getting that expansion, pushing that upper third. We can see we got this big expansion to compression. So closes above the upper second would put it above the all-time high, and looking for these further fib levels to the upside. I would still take it incrementally, especially in the lower term time frames. And then look for that expansion to really continue up into, the 105, 106, and then 110 to 112 by that two spot extension up there, 200% extension. All right. I think that's pretty much it for this here. Show the bearish divergence. Let's look at daily. It's still in the bullish control zone for a regular stoke. Pivot is going to be $97,000. So trading back above $97,000 would blunt an initial cross to the downside and losing the bullish control zone of a regular stoke. Also want to note that there is a few areas of trendline regression, even as I chew on my words here. Let's go ahead and just show this real quick. So we've got one, and we've got from this guy here to this guy here. We've got a little bit of trend line regression. If we do lose this, I'd be looking for the next little leg down. That's likely where we see, Bitcoin testing in and around this zone here, 92, maybe even 90, 93.5 to 92, and is kind of a fair game area. If we start seeing, 95 loss significantly on like a 4 or 6 hour, and then, trading below, anywhere below yesterday's low at 94.4, and we're most certainly looking at 93 to this low at 92. Anywhere below there, we're looking for the lower first, and possibly lower down to that 90,682, and maybe a retest of this little bit of structure over here. If we were to look at swings, by the way, we can use a swing chart, or you could just mark the swings if you want. Got swing higher low, right? And this is coming off of higher low structure. So higher high, higher low, higher high, higher low, higher high, higher low, and this is now a lower high. It is technically confirmed. Swing chart is not confirming it just yet because it's such a tight area. In this case, if we were to get a lower high and lower low, that's two parts of a full trend. That is a trend reversal setup. We would have to be aware of lower highs than this for continuation of trend on any breakdowns to complete a full trend to the downside, but it's early going still. Just something to be aware of. That's where we would likely see tests down. Anywhere below 97, we're going to see this start to break down. We just had the lower high put in. So unless it's trading above at least yesterday's high, wouldn't even be looking for tests up to the 98. Yesterday's high was 98,200, and then we have the actual swing up here at 98,750. So anywhere above yesterday's high, we will start to look for that high to get ran and possibly higher, and a little bit of a recovery. If we dive into the lower term timeframes, like the 12-hour, we can see that we've already kind of gotten the swing reversal set up here, the lower high to lower low. Coming off of this uptrend, we got a lower high, higher low, lower high, lower low. Well, what is this? That when you have the trend is your friend until the end of the trend, and then when you have the trend is unclear, everyone's in fear. That's when you look for breakdown below here and the lower second standard deviation. We're looking for Bitcoin to move to the next area. This is around the 88. 700, and then possibly down further, right, for expansion down further above the upper second, which is right at the all-time high now, then we're looking for expansion to the upside for some of the deeper price targets. So pretty simple setup. In this case, because of where the lower second is, it's basically right at this low, drop the low, expansion down, take out the all-time high. That's where the upper second is, closes above there, expansion up. And this is a compression. This is what we expect. Some nice consolidation after a couple of big legs up, right? So you got to remember this 73,624, that wasn't even that was a front run of the all-time high at the time at 73,835. We had a little bit of a swing structure built here where it was a swing higher low that really wasn't set in a this was a higher low structure. Swing charts calling it swing higher low, swing lower high, swing lower low, but in reality it didn't close this low, so it wasn't a closing low. The entire structure is the closing low down here. So this was just one big higher low to the swing high that was painted in, and closing high, swing low to closing low. And then we, of course, have the high painted here with a little bit of a swing lower high that led to, we had a technical high, did not put in a low. Swing high is just continuation there. Consolidation is needed. Direction will be picked on any closes back above 99,600 to 800, or below, in this case, 90,682. And then we're looking for just local structure and then a possible further expansion down. In this case, it's just consolidation until proven otherwise. We have multiple drives of bearish divergence here. I would actually like to reference kind of where this is coming in, because we can see where Bitcoin is trading at right now. From this structure over here, we could still get continuation drives or hidden bullish divergence if it were to put in a low on the 12-hour. But we do need to be aware of where the midline is. That's at 94,600. So again, that's right around yesterday's low. And then the bearish control zone, where is that? That is at $90,000. And we do not want to see that area close below. And especially, we don't want to see closes below 90,682 on the daily at minimum. We would get we would get expansion on any closes below $92,000 anyway here for the 12 hours. So we don't want to see that for the bulls, unless you're in a nice short position and you're a little bearish on this. Then that is what you want to see. 96,500 would turn the stochastic momentum indicator back to the upside here. I'm going to go one level deeper and go to the 4-hour here, because I think that this might give us our edge. We're seeing, a little bit of consolidation, tried for the expansion, bounced right up. That's what you usually see in a compression like this until you see a technical breakdown. We didn't see any closes below this low, just wicks below it. And yeah, so we would need to see closes below this low at 94,671. And if we were to see that, then we can look for expansion down, because that would also put it below the lower second standard deviation. On the 4-hour, nice tight range. Take out this last high at that 98,200. That would put it above the upper second, almost upper third there for expansion to the upside. Still need to see, of course, 98,750, $99,000, and then the all-time high break for that further expansion to the upside. What's the 4-hour looking like? We are seeing a bit of a stoke turn on any closes above 95,100. We'll see what the Asian session decides to do today and overnight, or if they're just going to leave it to New York for Tuesday. There is some economic news coming out this week. We've got JOLTS on the 3rd, which is tomorrow. That's the Tuesday candle. We've got subsequently ISM, and the 4th, we've got Fed Chair speaking. That's going to be Powell speaking on the 4th as well. And then we've got unemployment data coming out on Friday the 6th. So we've got an interesting Tuesday, Wednesday, and then we've got unemployment data on Friday. So, are some lower term time frame moves and possibly even fake outs likely to happen? Probably. I wouldn't be surprised. Players in this game might want to take advantage of some of the news depending on what that news is in the macro. I don't think it really makes a difference. And I'll give you a preview of the quarterly here. This is one of the reasons why I think things will be okay as long as we see quarterly closes or December closes into January, which is also the quarterly close above 83,650. Things are fine on the quarterly. We're looking at expansion. It's confirmed. Yada, yada, yada. Good stuff. But we'll talk about that later in the month or mid-month. And I'm going to leave you with this mess of a chart or this weekly here. Looks pretty good. Pullbacks, maybe a high put in. Just be aware of it. We'll keep tracking it on throughout the week. And I'll talk to you again on Wednesday. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Tune in tomorrow for the fourth part of Learning TA with Landy over on Deorganized with Peace, Love, Music. And we're going to be covering momentum, where we're going to wrap up trend, support and resistance, volatility, and how those three pieces create momentum. We'll be talking about all of it all at once. We'll be looking at RSI. We'll be talking about Stoke RSI and what the difference is between Stoke RSI and regular Stoke, or a stochastic indicator. And, there's plenty of other momentum indicators out there. We're not going to be covering all of them, but we're going to be talking about kind of how everything fits together and what we look for confluences and how to form your thesis. So that's going to be tomorrow. Join me at 10 a.m. Pacific Standard Time. I will post that to my timeline when we are ready to go live. Get in there and ask questions if you have any. And other than that, I'll see you on Wednesday. Have a good one. Take care.